Hey there, this is Bill with smarttrades.com. Today is Friday, November 30th. And as always, if you would like to see more frequent updates, please visit me at smarttrades.com. I publish just about every day a newsletter and also do live updates during the day via Twitter. And so please visit me there. Again, that's smarttrades.com. Today I'm going to start off with a bit of a review. You'll remember back towards the end of September, I believe it was the 24th to be exact, I posted some charts of Apple and as well as obviously the broader market, and mentioned that the possibility that if Apple rolled over, being such a large percentage of the Nasdaq in particular and the S&P to a lesser extent, that the broader market would probably fall. We were looking for a possible rally up to about 695 or so in Apple. Well, it didn't quite get that high. Here's actually the updated chart, and this is a mechanical system that uses Apple as a leading indicator and trades the Nasdaq futures. I make no claims of profitability whatsoever on these systems, but I do use them to kind of glean information about how the markets work and what indicators actually work in terms of a real mechanical testing. And you can see here that this system basically works off the premise that if Apple is declining and the Nasdaq is not, eventually the Nasdaq will follow Apple. And these are two mechanical sell signals that occurred shortly after I published that update back in September. This one obviously occurring out in October. And at any rate, this system worked out pretty well. Apple is indeed, I think, a very good leading indicator. I'd like to show you the actual results here of a system very similar to the one that you're seeing here. Actually, over the last about 2.5 to 3 months, about a 95% success rate on the profitable trades, and that includes both long and short trades. And again, no claims of profitability, but this is something that I use. I've been trading. I've been using TradeStation since the early 90s. I was one of the original several hundred people to start using TradeStation circa 1990 or so. And anyway, again, I use that to glean mechanical systems and also to test ideas, in addition to using Elliott Wave. Now, here is my long-term weekly chart of Apple, and we had looked at this as a possible B-wave peak. I still think that that is the most likely count, although it's possible that's a peak. That's a fifth wave peak up there. But one of the reasons I think it's a B-wave is that the pattern off of the early 2012 lows, I think best counts as an ABC. And then you have an impulse down, which again could be a 1 or it could be C. Have a nice cluster right around 517 in Apple. That's 38% of the rally from the 2011 low up to the wave 3 peak, and that's also 1.62 times A. That's the classic expanded flat or regular flat type calculation in the relationship with C to A. And once again, if Apple's bottom, it's likely going to help the rest of the market as well. So here's the shorter term count that I showed my customers in real time as we were approaching that 517 area. We obviously went through there a little bit. Have a nice triangular possible fourth wave here, and from there you can count 5 waves down. So when we have that kind of setup, we start looking. Here's another mechanical system. This system actually uses something a little different. This is based on volatility and the average true range, and the idea being that if average true range expands on an impulse wave and contracts on a corrective wave, given the context, that can be a buy signal. And indeed, this particular system generated a buy off of this nice little ABC off of that low where we had tested 517, exceeded it, but then managed to recover above it. And from there, obviously, once again, we've rallied considerably. Facebook. I also talked about Facebook back in late September. At that point, I was calling this leg down as A, or a part of A, looking for further corrective decline and ultimately looking for a buy. Here are the long-term targets, kind of a scatter box between 14 and 17. Actually didn't get that low. I believe the low is around 17.55. But anyway, here is again late September. We've got the A down, an irregular B up, or expanded B up, and then C back down. And we did indeed hold the shorter-term support in that 19 area. 1880.19 was a nice target, and indeed we held there twice for higher lows, and I think that best counts as a C wave of 2, kind of a imperfect C wave down, but nonetheless from there a nice impulse up. And again, here's that signature impulse up, small corrective decline, and we were looking at that as well in the daily newsletter. S&P, I think it best counts as a double zigzag down. Kind of a mess to be sure, but nonetheless, nice bullish divergence on the lows on the test of 1340, basis the S&P 500 cash, and we've since broken out above this area of resistance, which basically spans from 1377 up to about 1392, and indeed we found support there after failing around the 1410 area. So I think that we're probably going to go back and retest this eventually, but nonetheless, this is a fairly bullish pattern off of that low. I think it best counts as an impulse. I'm not writing off the possibility we're going to go down again. I mean, you never know what's going to come out of Washington, and we'll certainly watch that carefully. And indeed, here is an alternate count, and this one on the Nasdaq. The S&P can't be counted this way because there's overlap here with this wave 1 scenario, and in this case we have an extended fifth resistance for the Nasdaq in that case. And even if it's not an extended fifth, even if this is a zigzag too, which you can also count, resistance is around 2700 for the Nasdaq, and so interesting area to watch. You also have a cluster of previous resistance here, which may turn into support if indeed this is an impulse up off of the lows. And here is that count, in fact, as an impulse. And I think that, again, the Nasdaq off the lows and the S&P as well best count as an impulsive move off of the recent lows. Also, the euro. This is a 480-minute chart. I like it. It's a little bit shorter, obviously, than the daily, and a little bit longer than your basic hourly chart, so it gives you a little bit of perspective, but you can also see the details. Here's another trick I've learned over the years. The ADX, as well as the average true range, pretty good indicator of volatility. And at any rate, you can see here a nice high peak on the third wave with the ADX. Same thing on the way down, by the way. And then you have a pullback. So although there can be an argument here on how to count this rally up, whether it's 1, 2, 3, 4, or possibly still evolving 3, 4, this is likely a third wave, and this is likely a fourth wave. And as such, we're looking for a peak possibly up around the 130.60, 130.50 area, basis the euro. This again is a review chart. Excuse me. This is crude oil, and we talked about it in late September. Looking for lower prices. In fact, we were looking for the low 80s in crude oil. And here's the update. Again, here is the price pattern into the end of September. From there, we had kind of a mess, and in fact, this whole chart is a bit of a mess. But we did, in fact, have a five-wave structure down to about the 84 level, and from there we're bouncing back in what probably I think is still a corrective pattern. I think that both crude oil and likely the bonds are forming long-term sideways corrective patterns, and eventually they'll break out of there, perhaps bonds to the upside, crude to the downside, but that's getting a little ahead of where we are now. And at any rate, pretty clear ABC down to the lows the other day. And from there, I think we're going to get a bit of a rally. But again, there's a good chance that rally will be corrective in nature. Anyway, that's about it for now. Once again, visit me at smarttrades.com if you'd like more updates more often. And also like us on Facebook. I'll send you out a free newsletter for doing that. And all the links are at smarttrades.com. Have a great weekend, and thank you so much for watching. Bye-bye.